Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Brian Grete of Commstock Investments, and a higher day in the grains, mostly lower in livestock, except for deferred live cattle contracts. And Brian, start off with soybeans. They've been getting all the headlines and attention lately. New highs for the move, some one-year highs. How much of this China deal do you think we have priced into these futures already?
Yeah, I think quite a bit, Michelle, to be honest with you. The China deal has grabbed headlines here recently. And if you line up the daily price charts with the Chinese headlines, that's pretty much the game. Now, USDA Secretary Brooke Rollins chimed in today and said that Japan would be buying $8 billion of soybeans and other ag products. And so she kind of pandered to the market, I think, a little bit there. This is a deal that's been done a long time ago in late July. And so this isn't new business by any means. And the $8 billion will be spread out over many commodities, not just soybeans. She mentioned them specifically. But when you look at Japan and what they buy, soybeans fall fourth on the list behind corn, beef, and pork.
And January soybeans close to the $11 mark. But to keep this rally going, what does the market need to see in terms of soybean purchases that will be part of that China deal on Thursday?
Well, I'm kind of hearing about 10 million tons possible for China purchasing U.S. beans in early 2026 to bridge the gap until the new crop Brazilian supply is available. And so it probably needs to be something at least that much, if not more, to keep the market attention. There's still upside as long as we get the funds to buy, and it's very much a money flow situation. And so while the fundamentals do come into play, as long as the funds are willing to pump money into the long side of the market, there is more upside. But I think you're going to need two things. You're going to need China buying actively and significant purchases, if you want to use what U.S. trade officials have been talking about, and funds continuing to pump money into the long side of the market from a short-term perspective.
But Brian, 10 million metric tons is only about 350 million bushels of soybeans. Is that already programmed into USDA's export forecast, that 1.685 billion bushels, or not?
Well, whether USDA's forecast is accurate or not is another thing, but I can tell you that USDA only takes the policy that's in place at the time of its forecast. And so to answer your question, no, none of that was factored in because none of this was available when USDA put out its September WASDE report, which was the last one. Now, they get to their numbers on a modeling basis and all that other stuff. And so you can argue until you're blue in the face whether that number was right previously or not right and all that. But unto itself, that was none of the Chinese business was factored into that number.
With that being said, could the market be disappointed because ending stocks might have to actually go up here or not?
Well, I think that if we don't get the demand by the end of the 25-26 marketing year that USDA had plugged in, then your ending stocks would go up, even if you do have Chinese purchases. And so I think that there is some component there. We're into a price discovery right now. And so if we just use $11, which we pushed above in January futures, is there fair value at that level? That's still to be determined, I think, as we move forward.
So the January contract just under $11, should farmers be pricing into this rally?
Absolutely. And a large part of that's going to be whether or not these prices are profitable at your yields or not, based on what your costs are. So if you're profitable on this rally, definitely need to be selling. If you're close to profitability, but still a little bit underwater, probably need to make some sales as well and try to build a better price as we move forward through the remainder of the marketing year. If you're well underwater still at these price levels, it's hard to sit back and not take advantage of the type of rally that we've seen. But you'd probably have to be a little bit more cautious and or a little bit more aggressive when you try to build the price through the remainder of the year.
Is it possible that China has been buying any soybeans under the radar with the government shut like they did in 2018?
I think it's possible. Everything that we're hearing out of China is that they're telling the buyers to be quiet and not do anything until the deal gets done. And so we'll know more on Thursday, I guess. But we won't really know anything more because if they do make purchases, USDA is closed, and so we won't get daily and weekly numbers until the government gets reopened and all that back data is given to us.
Could China buy corn out of this deal or not?
Oh, I'm sure they probably could. I don't know. The details the fine print will be key on that one. I don't think China needs corn, to be honest with you. They probably don't need wheat either. So soybeans are the headliner here, and sorghum is probably one that they may look into buying, and cotton as well.
And the corn market, is it just following soybeans here? And talk about the price action, because we went up, we filled that chart gap area from July, but we couldn't close above it.
Yeah, corn is clearly a follower market at the moment. I don't think it has enough legs to stand on its own and lead a price rally. We would need to see something pretty spectacular for that to happen. I think this is a soybean-led rally. And honestly, the wheat market probably has performed better than corn. And it would be probably a much bigger story if it wasn't for what's happening in the soybeans right now.
For sure. But Brian, yields probably coming down. We don't know that because the government isn't open and demand has been good. So, could we be slowly getting below the 2 billion bushel ending stocks number here or not?
Yeah, I think that's possible. It's just that year over year, you're increasing fairly significantly in corn ending stocks. And we're sitting at a price level now that feels like it's about fair value for the corn market. So corn needs some help to continue to the upside. Now, we didn't get the October crop production report from USDA. The November crop production report is in jeopardy. USDA doesn't give a crop production estimate for corn and soybeans in December. And so we may have to wait until the final estimate in January when the government's reopened. I assume it'll be reopened by then to get the next set of yield data from USDA.
Is that a good thing or a bad thing, though, for the market, Brian?
I think it's a bad thing, to be honest with you. We need data. And I think that's, you supplement it with private data and stuff like that. The one constant I think that we can turn to is the cash market, because while the government's shut and we aren't getting USDA data, we still do get futures trade on a daily basis, and we still get cash market on a daily basis. And so we have basis, and we've seen some of those levels improve here as we move through harvest. So what's that tell us? Well, it tells us that the near-term supply, whether it be because the yield wasn't as high as anticipated or because the farmer's storing more or whatever the reason is, isn't enough to offset the demand. And as a result, the end user is having to, the exporter, the ethanol plant, whoever the case may be, is having to raise the basis to get more supply.
This last 25% of the corn harvest that we have to try to tuck away, how difficult is that going to be? Can we see some harvest pressure building because of it or not?
Oh, absolutely. I think so, because, we knew going into harvest, big crops, both corn and soybeans. We just didn't know how big exactly. We knew that storage was going to be tight, especially in some of these areas. We've unexpectedly seen basis improve. So that means that a lot more of the portion that's been harvested already has gone into bins. And so you're probably going to run tight on farmer storage. And as a result, I think you could see either your basis widen out a little bit as we see some of those bushels marketed, and or we do see some more hedge pressure on the board.
And what about the wheat market, Brian? We've had a pretty good bounce off of 5-year lows. Is this all just short covering?
Yeah. So the difference is that we know that the funds have been short for a long period of time in wheat. And so I do think that they're covering short positions. You can look to several factors of global production numbers and some export figures and stuff like that around the world. But ultimately, I think that it comes down to the funds have decided to cover short positions in the wheat market.
Do they have enough technical momentum, though, right now to keep covering, or how much of that short do they cover?
I think that wheat falls clearly in the same category as corn. It needs help from soybeans to continue higher. So as long as soybeans continue to lead to the upside, those other two markets will actively follow.
Cattle market, it has been an ugly ride here lately. Today, we at least closed with feeders off of limit down, expanded limit status, and the back month live cattle futures actually were in positive territory. Are the funds done liquidating or close?
Well, it sure does seem like, based on price action on Tuesday, that we now have the longs that needed to get out are out. And so you can come back to somewhat of a more orderly market when that's the case. Live cattle futures have performed much better than feeder cattle have. The cash market last week was down less than $2. And while that's a sizable weekly decline, it wasn't as much as some feared. And so I think we start to refocus in live cattle futures on the cash cattle trade. The feeder cattle, somewhat still disorderly. And keep in mind, feeder cattle led to the upside, so they're going to lead to the downside. Feeder cattle cash prices really got out of hand in some of those auctions, many of the auctions. And so we're seeing a recalibration on that front right now.
Yeah, we've heard some pretty wicked price drops in the feeder cattle market here, the cash side this week, haven't we?
Absolutely. And that will continue, I think, near term until we get some normalcy back in that market.
Otherwise, you could argue that the fundamentals of this cattle market really haven't changed that much. So does that mean we go back and try to build a base, or does the market continue to be fearful about all of these things the administration is doing to lower beef prices?
Well, the administration is one thing, but let's keep in mind, this is money flow is the most important thing right now. So you can argue fundamentals, you can argue what the administration has done, but it's money flow. It's money flow in and money flow out, and so we are trying to find what a fair value price is right now.
But Brian, the president at least said today he doesn't want to hurt cattle producers, but a lot of them feel like he is the cause of this turn in the market or a top in the market.
Absolutely. So, his initial comment on Tuesday was that, maybe the cattle producers, cattle ranchers are doing too well. And then he rescinded that a little bit and backtracked and said he wants to bring down beef prices without hurting the rancher. And so we'll see. I don't know where it all leads. It sounds like maybe they're going to go after some concentration within the beef packing industry, but who knows? Like everything else in Washington right now, it's kind of a wild card.
Yeah, the outcomes of the meeting with the Mexican ag minister on reopening the border, the Brazilians on maybe lowering beef tariffs, those are all in play here too, aren't they?
Absolutely. So there's a lot being thrown at the cattle market, which was already very hypersensitive because of all the speculative money that had flowed into the long side and now is starting to come out. And so just a very fluid situation in a volatile market.
And hogs, another down day there. I know cash market continues to fall, but we've got a big discount with the futures. How much lower will we go?
Oh, I think the trader will remain very comfortable at big discounts in the futures until we see some stability in the cash index and the pork cutout. And we haven't seen that yet. So as long as they continue to fall, we'll have big discounts. Now, the current discounts in futures are about what you would typically see from a seasonal perspective from now into mid-December when the December futures leave the board. But I think you have to see some stability in the cash fundamentals first.
Thanks so much, Brian Grete with Commstock, and that's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.